Hello and welcome to the Mortgage Broker Builder, the CEO1440 Show, where we look to maximize your full 1,440 minutes every single day, bringing you tips, techniques, tactics, different things that you can use to hopefully elevate your business. And I've got a guest today, been doing something kind of cool in our space for the last 4 years. We've got Mr. Michael Barnett here with Loanspark. They do commercial lending and a whole bunch of different things that I think might be able to help you. And so for those of you that don't know, John Jerkovich, Mortgage Broker Builder, I've been doing this for 28 years. My whole and sole goal here is to help you get more out of your day, sell more loans, lead a better life, and take advantage of that 1,440 minutes every day. Mr. Michael Barnett, how are you?
Happy to be here. Glad that I have my voice back, so I'm able to share the message with you and also your listeners. Happy to be here again. My name is Michael Barnett. I'm the CEO and founder of Loanspark. Loanspark is an embedded lending platform that allows mortgage brokers and other companies become a lender to their customers. So mortgage brokers use us as the lending platform of choice to provide commercial loans and business purpose loans to their customers. And throughout the session today, we'll talk all about the different types of commercial loans and business purpose loans that we offer. So,
yeah, and I had my first, I called you Michael Bennett. Isn't he a football player? Who was Michael Bennett? I felt like Minnesota Vikings running back.
Well, you got Tony Bennett, you got
he was a
Kevin
singer.
Bennett. There's a lot of Bennetts out there. I've been called worse, John.
Okay. Well, I apologize, right? But if you get your mess ups out early,
yeah.
So Barnett, not Bennett. And just so you guys know, a lot of the questions I get, right? People are constantly bringing me questions. John, what do I have for this? Do you have a home for this kind of loan? Where can I take this? I get those questions day in, day out. And one of the spaces that I get a ton of questions are inside of the commercial space. I got somebody that wants to buy, this or that. And so I'm always out looking for tools and things to bring you. I stumbled upon Loanspark, had some conversations, have had multiple conversations with them now. And if you're sitting out there, and like most of us, we're trying to take care of real estate agents, people inside of our community, and you run into these transactions. And so we're gonna let Michael Barnett talk to us about kind of what they offer and how it might be able to differentiate yourself from the person sitting there at the bank or the credit union to be able to offer more to your realtor partners. And the more products you have and different things, the more value you can add. And the more value you add, the more money you make. So tell us a little bit just about, you're the founder. You're a co-founder or the founder?
I'm the founder, although we do have a co-founder, and our co-founder is Sasha. She's amazing. But first, let me talk a little bit about my experience as a mortgage broker, because I used to be a mortgage broker for, I guess, some would say a long time, but I was a mortgage broker for about 10 years prior to transitioning into the commercial side. So I was a residential MLO. I worked for one of the big box mortgage companies for a number of years. And during the early days, really didn't have a ton of exposure to commercial loans at all. Like from time to time, customers would say, I want to buy a building, or I want to buy an investment property. What were we doing? We were doing primary mortgages and second homes. That's kind of what the shtick was. When I transitioned to become an outside loan officer, so I was out in the streets, so to speak, managing real estate offices. And at that time, they were Coldwell Banker Mortgage real estate offices at a territory. When I became that outside loan officer, I started to get a lot of inquiries for a lot of different things. Inside loan officers, really, you're in a call center, and most of you at that time, you're receiving inbound inquiries for the home mortgage. I need a home mortgage, or I need a home mortgage, right? But when you're an outside sales, that's where really you start to experience a lot of these kind of what you may consider crazy opportunities. In customers looking to buy a commercial building for their business, or maybe there's someone wants to build a ground up construction project and they want to build, let's say, 150 new units. As an internal loan officer, that's something that you wouldn't really hear a lot about. And if you did, you just immediately say, no, sorry, can't help you. But as an outside LO, a lot of opportunities and a lot of options that you have available to you. One of those options is Loanspark. So we really built Loanspark to be that one-stop shop for a loan officer to have an easy solution for those technical problems. And those technical problems would be commercial loans, business purpose loans, to an individual that's mostly originating or only originating primary mortgage homes, second homes, lines of credit, HELOCs, et cetera, et cetera. Commercial loans would be considered a more technical product or a more complex product. And what we've done here is we've made that process super easy for an individual who doesn't do this every day. So.
Yeah, and I run into, and I went through their onboarding process, checked out the contracts, did like the whole thing, and have checked out what they kind of offer there. Let's just start with that, right? So I'm a mortgage broker sitting here in the great state of Michigan, right? We've got real estate agents, people that do business. Somebody comes to me and they need money to buy a building. And traditionally, right, I wasn't able to do a warehouse facility. You have a whole lot of different options. I think there's probably like 8 to 10 kind of buckets that you do your business in. Can you just kind of break down what those buckets are, right? You've got
sure
like SBA loans. You've got a variety of buckets that I now have access to do through Loanspark. Can you kind of break down what areas someone like myself would be able to access while using something like a Loanspark?
Absolutely. So we have, let's call it, two sides of the product matrix. We have our real estate side, and then we have our non-real estate side. So let's talk about real estate side first. So on the commercial loan side of our business, we do purchase, refinances, of course, of essentially almost any type of commercial building. The categories would be small restaurant. So whether it's a sit-down restaurant or whether it's a takeout style restaurant, we do warehouses. We could do things like offices, small offices, or even larger office spaces. We would do things like self-storage facilities. Almost any type of commercial property that you could think of, we have the ability to fund it. Now, we do have a sweet spot. We have a very, very specific product guide that breaks down all of the types of properties that we will lend to. But that's a little bit about the actual asset. So onto the product types. So we do, again, acquisitions and refinances of all commercial properties. And we would do that through private loan that is funded by Loanspark or through the SBA for scenarios where a business is going to occupy the space that they're buying. We typically reserve the SBA program for only certain use cases, just because it isn't a great fit for everyone. It isn't priced for everyone. In many cases, the SBA could be priced higher, and in other cases, it's more limiting. But the good news is we have conventional products and we have unconventional products, depending on the customer's needs. So that's on the commercial side. Then we have like the business purpose loan side. So the business purpose loans will be like a DSCR loan for a single family residence. So we have DSCR loans from single family 1 to 4 unit properties, and that will be acquisition, purchase, refinances, and also rehab loans as well. So we'll rehab a 1 to 4 unit property, purchase and refinance on a 1 to 4 unit property as well. Now, within that category, there's a couple of different ways we can underwrite. We can underwrite to true DSCR standards. We can underwrite to, let's say, a no DSCR standard. We have kind of stated income within that, and we have bank statement within that equation as well. Not to overcomplicate things, but we can also DSCR, no DSCR, bank statement loan, and do stated loans on the commercial side as well. Not to overcomplicate things. So we have the those features on SFR 1-4s and similar features on the commercial loans as well. And another area that we excel is on the multifamily 5+. So I get a lot of questions all the time. Do you guys have a unit cap? Can I bring you a 100-unit multifamily building? You absolutely can. We don't have any unit restrictions at Loanspark. The only real restriction is loan amount. So our sweet spot is anything in the $5 million and under loan amount, but we can go higher than $5 million depending on the case. But our sweet spot is anything $5 million and under. There's no unit limitation there.
Hey, if you're here, it's because you understand that the world is changing at an alarming rate, and you understand that big data is going to dominate as we move forward. Either you're going to use it to grow your market share, or somebody's going to use it against you to grow theirs. If you want to dig a little bit deeper here, take a look at your own business, figure out and identify some key constraints, maybe some things that you could do a little bit differently to grow a little faster. Here's what I can tell you. After 27 years of doing this, helping well over 1,000 loan officers earn hundreds of millions of dollars of commissions, there are a couple of key constraints inside of your business. I don't know what they are right now. I just know that they exist. So if you're curious about this, let's get on a strategy call. Take 20, 30 minutes. You will walk away with 1 or 2 actionable items that you can do to do more business as you move forward. There'll be a link someplace here on the page. I look forward to personally meeting you. So, and we do, like most of the lending world now understands DSCR loans in the 1-4 family. It's almost become vanilla in the point that some of the largest wholesalers are offering, something along those lines. It's vanilla. They won't go as wide or as far as deep as someone like you probably would. They just have a different appetite for it, and they probably have a dozen Wall Street buyers that will take that product, so they're comfortable doing it. But where I see a lot of the things coming in is maybe it's a mixed use. The first floor is retail, and then it's 8 units. And there's not a home for something like that. Do you have a home for something like that?
Oh, absolutely. That's another asset type that we really like. Mixed use is an area where we excel. Again, there's no unit limitation. There's no square footage limitations or restrictions or things of that nature. Of course, different MSAs, different cities may have different requirements, or depending on the commercial building that sits on the first floor, there may be some underwriting overlays for something like that. But overall, mixed use is an area where we really excel. And also, there are a lot of what I would call big box mortgage companies that are offering the DSCR vanilla product right now. Their underwriting box is pretty restrictive compared to what we do because we're a commercial lender. And because we're a commercial lender, we look at the asset differently than, let's say, a mortgage company would.
Sure.
We look at things like entirely differently. So where we may be capped and restricted will be far different than, let's say, one of the big box mortgage companies.
Even inside of the more traditional mortgage wholesale lenders, there's a lot of nuance between what one company will do and the next, even people that are traditionally inside of that space. So something that I thought was kind of interesting about you guys is there's a couple of different ways when we think as a mortgage broker, when we think of it, we're going to go out and we broker a deal, we wholesale it, we upload something to a portal, we do our thing and we close a loan. With you, there's a couple of different ways people can do business, as simply as just referring it to you and getting paid, all the way up and through essentially handling it, generating the whole thing. Can you kind of walk us through, if I'm somebody sitting there today and I have that mixed use, eight residential units upstairs, mixed use on the first floor with a nail salon in the basement. I added the nail salon just for nuance. But
no windows, no windows in the basement either, right?
No windows in the basement. It's just down there. You smell that acetone. It's like burning your eyes out in the nail salon. But it happens. Last time I got my nails done, it's been a long time because the smell was so bad. What would be the options coming through and bringing something like that over to you?
Yeah, a couple different ways you could do that. So our approach is we allow the brokers to choose whether they want to broker a file to us, because that is either a strength, the asset type falls within their strength or their comfort zone, or they want to broker a transaction to us where maybe the asset type isn't a strength or in their comfort zone, but they want to learn. And that's a large part of what we do. I would say probably 70% of the originators that have partnered with Loanspark and that fund loans with us, this is probably their first commercial deal, or it's the one of the first 5 commercial deals that they've ever closed are with Loanspark. And that's because we've really built a great educational model. So when you are onboarded with Loanspark, you get paired up with an internal loan officer, and that internal loan officer will guide you as a mortgage broker through the process and inform you what to say, what not to say, the documents you need, why you need to collect these documents, how the product, how it works with insurance, how it works with environmental searches, how it works with the appraisal process. Like, we will educate you from soup to nuts on that process. So if you weren't comfortable with commercial, our goal is to help get you to a level of comfort with the commercial lending process. So if you're comfortable with commercial, great. If you're not comfortable with commercial, you can broker to us too. However, we also have a referral model. So on a transaction by transaction basis, maybe it's something that you may not be comfortable with it and you don't really want to learn. I'll give you a good example of that. Let's say you come across a residential building contractor and they have a project and they're looking to build, let's say, 50 units, 50 SFRs. It's a complex transaction that it takes a long time to put it together. There are multiple steps to just make that type of deal happen. What I find almost always is our mortgage brokers, they refer those in through our referral channel. So as a deal is being submitted, you get to choose at the point of origination, do I want to refer it or do you want to broker it? If you want to refer it, you just key in all the details about the deal that you have, key in the contact information of the POs, the primary contact, set the expectation with the primary contact that they will receive a phone call from Loanspark. One of our team members will reach out to that contact and we will start the sales process or loan process with that contact. When the deal funds, you'll essentially get paid a referral fee. That's how that works. So the good news is you get to pick and choose on a transaction by transaction basis if you want to broker it or if you want to refer it. And that is for all of our products, whether it's a business loan, business line of credit, SBA loan, commercial real estate loan, full suite, you get to choose brokering or referring.
And on the referral fee, is there like a standard amount that how would they expect to get paid? Let's say it was, $1 million deal, that 8-unit thing was $1 million deal. What would kind of the expectation be that they would be getting back on something like that?
Sure. So our standard referral fee is 20% of gross margin. So however and whatever it is that we would earn on that transaction from a gross margin perspective is what we would pay to the referrer. So it could be origination fees. It could be other things that we may charge to the borrower to kind of make up that total gross margin, but we'll pay out a percentage of the GM on any transaction that gets referred.
So on a $1 million, just again, I'm not trying to hold you to it, but on like $1 million deal like that, what would be the gross, like your target that you would be going after on most of your deals? We're in our world, we're fixated on you have to set a margin all the time, right? The CFPB requires that you do all these things. So we understand having a fixed margin. You don't have that, right? Yours can fluctuate all over the place. Right. What's kind of like standard on that mixed use $1 million thing? What would your company traditionally be targeting to make inside of that space?
Yeah, so something like that, we'd be targeting between 25 and 30,000, or 2.5 to 3 points, depending on the situation. That's what we'd be targeting.
So if they got 20% of that, they'd make $6,000 referring it over.
Exactly.
And very little work, right? You do some initial stuff, and you hand it off, wipe your hands, sit back, and then cross your fingers and wait.
The amount of work is very minimal. I would say the hardest part in the referral equation is setting expectations with the point of contact that they're going to receive a call from Loanspark.
Well, that should be relatively easy.
Exactly.
So if you're listening to this, like I said, you run across these deals, having a network, whether Loanspark is the end all be all for you, but I believe your clients deserve or they want to have something of value. So not having something like this, all it's going to do is move them to the next person. And then when they go and buy their next primary residence, if you couldn't help them here, what makes you think that they're going to come back to you to help them on the next transaction? So just having something like this, even if you don't want to go out and learn how to originate it, having a conduit or a place to send something, I think just makes sense, and having a basic understanding of how the whole thing works. And the commercial process is different. And what I've noticed so far, just in my dealings with them, is they do a very good job of explaining to you what's actually happening, where it's at. Like appraisals cost different amounts. There are environmental impact studies. There's just different things on the commercial side that maybe your better focus might be, keeping your head down and grinding, doing the normal stuff and sending it to somebody that really understands it. Do you find do more people utilize the referral program, or are more people getting in there and brokering, trying to do this themselves and figure it out?
I think it really depends on the type of transaction. I find that the more complex transaction types get referred more often. So, and those are usually ground up construction transactions, or even the rehab transactions. They're mostly get referred, not always, but mostly. And then anything or a transaction that falls into the non-real estate category, those oftentimes will be referred over brokered. But we try to convince our brokers to broker, because we'll teach you how to do it, and it's not that complicated. So that we want our brokers to make more money. So that's the idea. Right. Because when you broker, you can make more. And we want to ensure that when you partner up with Loanspark, that you're actually making as much money as you can on a particular transaction. So I'm fine to kind of spite myself to benefit you, because the better we can build our brokers, the more money we pay our brokers, the better off we are as a company. So that's kind of what we believe in. So we will try to convince you to broker the transaction versus refer it to benefit you.
Well, it makes sense, right? If I go through and I broker a transaction, I have a better understanding of it. Now, as I'm just walking around the street, I'm sniffing them out all over the place, the chance of a second deal coming through, a third, fourth, I think you want to convert us all from residential people over to, commercial, and have that become the bulk of our business. It's a sneaky little back channel, but it makes sense. I mean, you want them to do as much as possible.
I want them to do as much as possible, but at the same time, I think there are less transactions in the United States that are commercial than are non-commercial. So converting a residential loan officer to a commercial, funny. That really isn't our goal, right? But I think that
kind of.
I know. But I think just the idea of enabling you to have this extra tool in your tool belt, I think it's important, because we're in this place now, like in history, where everyone's trying to provide the most amount of value to their customers, regardless of who the company is. We're all just trying to provide value. We want to be useful, because the more useful we can be, the more money we'll make, the more successful we'll be, the more sticky we will be to that client. So with our product and our platform, I think we are that to the residential mortgage loan originator. We're that sticky product.
Yeah, I like to equate value. I think that often value is a word that just gets thrown around out there. People no longer even know what it means to add value. Right? It's just go add value. Just go get them, Tiger, add value. And like, how the hell do I actually do that? And I'm as guilty as the next person, just coaching people to go add value. And to me, I've kind of spent a little time on what is adding value, and adding value is problem solving, right? So how equipped are you to solve all of the necessary problems? And if all you have is a hammer, everything looks like a nail. So give yourself a little bit of nuance there to be able to solve additional problems. And even if you can't solve them, have enough understanding to be able to speak to them. Actually solves a problem as well by being able to clearly eliminate you as an option. You're still solving a problem by understanding it enough. What about, I know you have the ability, and this is where I'm always blown away by commercial people that are really good at it. You bring them something, and it's a problem that I see one solve, and the next thing you know, they're ending up getting a business line of credit against this business over here. They're doing something against this business over here and something over here, and then they're buying the building over there, and it all comes together where almost I don't say they didn't need any money, but they've leveraged all these things to buy this, and that's where it becomes, I think, very nuanced and where experts are actually shine. So if you have something that's complex like that, where you are combining maybe a line of credit, you guys offer a lot of business, just straight up lines of credit, correct?
We do.
And you could use that line of credit against your existing business towards the down payment of a property or something like that?
I mean, there are no limitations in terms of business loans and the use case.
Okay.
There are some banks that offer business loans that have covenants that prevent a business owner from using it for a certain purpose, but the loans that we offer can be used for anything. So once the business accepts the loan, I mean, the idea is the loan is used for business purposes. It's that's the goal. But right. I mean, look, we all know that many businesses, the operators are investors, and they may use that capital to fulfill their business mission, whatever that business is. So I think to answer your question more specifically is we can leverage real estate assets, the business as an asset, equipment as an asset, and the business can use that collective capital to fulfill whatever their mission or their goal is.
The way I see it, we in the residential space, they now have 15% down DSCR stuff. So somebody's going to buy a commercial building and they always, can I buy it with 15% down? And what I've found is most of the time that's 25, 30% down is kind of the barrier to entry there on my, warehouse. And so they don't really condition for that, or they're not expecting it. So you can get creative by kind of bundling some things together to still accomplish the goal. And if you're not asking the right questions, well, you leave money on the table because you don't know to ask, how do the other businesses cash flow, right, and some different things. And I'm just learning it. On a scale of 1 to 10, where I'm at in my understanding of commercial loans, I think is probably really low. But in comparison to the whole lending world, I'm probably relatively high.
Right, makes sense.
So being able to just partner with great people, I think it makes a lot of sense. And I've learned way more through osmosis, watching other people do it, than I ever have through reading a book or something like that.
That makes sense. I mean, there are key differences between the commercial loan process and the commercial loans versus non-commercial loans, but there isn't as much variation as most people think. If you are good at your job today as a mortgage loan originator, and if you were to originate your first commercial loan, and let's call it is a commercial office that is under $5 million through Loanspark, one of the things you'll notice is there isn't that much of a difference. One of the big differences are the disclosures, because there really aren't really any on the commercial side. There's a term sheet. That's really it. The disclosing process, the way that commission is disclosed and earned, it's way more clear and easy than non-commercial loans. That's another difference. Easier. The appraisals are more complex. They're more expensive. That's another difference of just 5 times the cost. And then there's environmental checks and things on buildings and things like that. But otherwise, it's very similar in terms of process. You're going to get an approval. You're going to get conditions. You have to collect the documents. You have to upload the documents to make sure the documents meet the condition. You have to order title, make sure you get clear title. Like, it's a very similar process from a flow perspective, right? Interest rates are different though. That's something that I find that most mortgage loan originators, like that's the gotcha or the aha moment is when you are, when we're working through the process and the quoting a deal. And maybe if I were to go get buy a residence today, maybe I could expect an interest rate of, let's call it 6% with a half a point, or maybe no points. Well, a commercial office for that same borrower could end up being 10 and a quarter or 10 and a half. It could be as high as 11 and a half, depending on the situation. So the interest rates are different. So that market is just a little different than, let's say, the kind of wholesale mortgage market. It's a little different.
Yeah, I mean, the risk equals the rate. There's no Fannie Mae, Freddie Mac sitting behind it guaranteeing that you get paid. You can end up with a turd of a building, and you end up with a turd of a building, and nobody's there to bail you out.
That's true. That's the reason. That's also the main reason. The cost of money is a lot more expensive on the commercial side because the lenders aren't typically borrowing from banks, and they're not borrowing from the Fed. So they're coming from private investors or private funds, and the cost of funds is a little more. Yeah,
and the building isn't as easy to sell, right? I mean, it's pretty easy to sell a $250,000. FHA has great rates because it's backed by the federal government,
right?
And there's a large demand for that property. There may not be that large of a demand for a, 25,000 square foot office space.
Correct.
There's not a lot of buyers out there for that.
Especially post-COVID. There is far fewer.
I do see like a trend of like companies having people go back to work. So it may actually, help out that commercial space, but it all boils down to the risk equals the rate. So I just want to step back. So we're there, we've got a couple of different options. You guys offer kind of everything, and I can refer it over to you, get paid something. I can broker it myself, get paid significantly more in most cases, right? You're going to get 4 or 5 times more if you're brokering it back yourself with your help.
Right.
What does that process look like, right? The sign-up process, I just went through it recently. Super simple. You guys send over a contract. But if they wanted to go out and get signed up to do something with Loanspark, where would they go right now? What would be their next step?
Sure. So to sign up with Loanspark, you go to the Loanspark website. Actually, I'll go there right now. And there is at the top of the website, there is a link that says how it works. So we are an embedded lending platform. So that also works with mortgage brokers. So if anyone were to go to our website, you'll see that we talk a lot about embedded finance. And so just what that means is we are a white label provider of finance to corporations that essentially embed our technology inside of their technology. So to their consumers who are applying for loans, but also we double as an amazing resource for mortgage brokers. So don't be discouraged by the embedded finance all over our website. So at the very top, you click on how it works, and then you would click on our solutions. And then from the our solutions page, that's where we kind of explain the different levels of partnership with Loanspark. Level 1 is what we call our Spark tier. That is for mortgage brokers.
Okay.
The Spark tier is for mortgage brokers. You click the button at the bottom of kind of that first column to sign up, and then you'll be presented with our broker agreement, essentially. Once the broker agreement is completed, then our onboarding team will complete the onboarding process. It typically takes a day or two to go through that process because we have to do background checks and verify every broker to make sure they're approved before we can allow you onto the platform. Once your account is approved, then you would be assigned to an internal loan officer that would be your account representative. And that individual will be your 411, your 911, your primary point of contact at Loanspark. When it's time for you to submit your first deal, a couple ways you could do that. I recommend calling your internal loan officer and walking through that deal with your internal loan officer so they can guide you as to what information you might want to obtain, some of the things you may not have thought of, right? Just guiding you through that first transaction manually. And once you're comfortable, then you can just submit your transactions through kind of a portal that we offer. You can just punch in the details of what you're looking for, hit submit. We'll receive it internally. We will review that transaction. You'll get a phone call from our internal loan officer to, again, review the transaction details with you. For commercial real estate loans or business purpose real estate loans, the way commercial lenders like Loanspark handle those transactions everything is done through term sheets. So once we get to the point where we've provided a price, we provided a quote, we provided rates, etc., you agree to those rates, we've agreed to what your markup is going to be or your fee, origination fee, etc., is going to be on that transaction. Then to obtain customer commitment, Loanspark will generate a term sheet. That term sheet would be delivered to the customer. Customer will execute the term sheet. On that term sheet are the terms of the transaction, the conditions and documents that we need to collect, and any other disclosures that need to be made up front on that transaction. Once that is signed, then we'll also provide a link to pay for the appraisal, and then we're off to the races. The loan process starts. Okay.
Yeah, and so the way that I see this happening most of the time, they have a deal in mind. They're not yet signed up. Is there a mechanism for them, right? So like in that signing up gap phase there to fire something over and say like, hey, I've got this. Would this be something that works? Because we like to do things backwards here, and that we want to know that we want you to commit to saying that you can do it before we're willing to commit to fill out anything. Is there a mechanism to do that right now? I mean, I know that I've done that with you, but I also already had a relationship with Sasha before. So like I had an in, so they got a deal. Is there a way to get a look-see before they fill out the stuff or while they're waiting for the stuff to get approved?
So there is, and it's not public, but I'm about to make it public. You could email partners@loanspark.com. That will go straight into our partnerships team. So have a question about partnership, question about a deal, not signed up. What does it take? Can you do these types of deals? You can email us there. And a member of our partnerships team will reach out to go through that process with you.
So that right there was the gold. If you have a client that you don't know where to put, and this might be an option for them, my only takeaway from this whole thing is just remember Loanspark. And when that thing does stroll across your desk and shows up, dressed like a unicorn, that's a lot of dollar signs, and you don't know what to do with it, partnership at Loanspark, give them an outline of what the deal looks like. They'll probably come back with a couple of different questions for you. And then they will come back and say, yeah, I believe we'd be able to do this, but it would be at a 70% LTV because your property is rural or whatever it might be, or it'd be a 75% because, the building's been listed for 7 years. It's on its 18th price reduction, right? Whatever the scenario is. And they then come back to you with a proposal, kind of, not a term sheet yet, but then you take that, you present that to your client while you're getting signed up, and then you kind of get that ball rolling. That's how I've seen this work almost every time when it deals with mortgage people doing commercial stuff.
And if the property's been listed for 7 years, please don't bring that one to us. But the cool thing, just funny story, John. Our seasoning requirements are very limited at Loanspark. So, for example, if the property's been listed recently, we can still fund it. A lot of companies won't, but we can. We provide cash out, even if it's been, let's say it was listed within the last couple of months, we can still make it happen.
Yeah, and that is one thing that I've noticed just in my conversations with you. And the commercial space as a whole is kind of one of where Fannie, Freddie, those kind of things often lack common sense, right? It's a hard, fast guideline, where as soon as you move over into the commercial space, it's more of a nuanced guideline, but it has to make more sense where, just because you can get something approved through a desktop underwriter at a 54 DTI, like that's not a real feasible payment for someone to make. Just because it's approved, we'll do it in the conforming world or the conventional or our normal world. Whereas you move over to the commercial world, if they believe that there's a good likelihood that the client's going to pay back the loan and perform, they'll find a way to make it work.
Exactly.
And it all just comes down to, how high of a rate do they need to charge to mitigate and offset the risk? And then do they have something to do with the property in the event of not being able to do it? And even that property that is listed, he said, don't bring it for 7 years. But if it had been listed for 7 years at $750,000 and you were now getting it for $250,000, like a screaming deal, like they might still do it.
Yeah,
it just has to make sense.
We may look at it as a bridge loan as opposed to a perm upfront. So, yeah.
And a bridge loan, right? Again, a lot of commercial stuff closes on a bridge loan, and it's not the bridge loan that you think where you're selling your primary residence to buy another one. All bridge means in the commercial world is short term.
Correct.
Like they call it a bridge. It's just, and it's probably a better actual term. It's bridging where they're at today to get something better in the future. And anything, if you were out today, let's say you weren't doing Loanspark and you had to go back out and begin originating loans again today, I always like to ask people that, where would you start? Like you couldn't do Loanspark anymore. You were stranded on you're in Georgia, correct?
We're in Boston.
Boston. Okay. I knew that. Why I thought Georgia, I'm not sure. But
what would I do?
You're stranded. You're there. You're on the streets of Boston. You've got a bunch of Irish dudes around. You got to go out and find some business. And Matt Damon's over there. And your Loanspark's gone.
Ben Affleck too, right?
Yeah, both of them. They're there doing some stuff. You got, the Boston Red Sox playing in the background. And you've got to go and start a mortgage business again. That's your only option. You're back in mortgage. What would you be doing today? Where would you be getting your business? What would you be focused on?
Sure. If I had to start again as a loan officer, I would 100% be a commercial loan officer myself.
Okay.
Just based upon my experience, knowledge, and where I know the deals are with as little red tape as possible. I would focus myself on, of course, building relationships with real estate agents. I mean, that's what I've done in the past, and that's what my bread and butter had always been until recently. So I would immerse myself in commercial lending. Number one, that'll be my game. I would become the commercial lending expert in my local area. And the reason why I would focus on commercial is because there are a lot less of us. There's a lot less competition in the commercial world than there is in the non-commercial world.
Sure.
That's also another reason why I focus my energy there. I think also the third reason I focus my energies there is the yields. I think the income opportunity is high, and the barriers to entry are lower. For example, and I know this is probably a much longer answer than you expected, John, the licensing requirements are a lot less restrictive. So if I had to, let's say, start today and with no affiliation to Loanspark, because we have Loanspark as its corporate licenses, but I could start today in my state without needing a license, and I can go and start originating commercial loans right away with no barriers to entry. And yeah,
just quickly there, that's an interesting thing. So if I have an LLC, do I need an LLC to like sign up, or can I just go and do it as an individual sign up? Should I have any kind of insurance if I'm doing this? Like,
I mean, I think every loan officer should have like an errors and omissions policy.
Sure.
Right? It's very inexpensive. I think everyone should have one of those. But the barriers to entry are very few. A computer and a borrower. and of course a lender, right, who can provide the loan. That's all you really need. And if Loanspark existed, and let's say I wasn't the owner of Loanspark, then of course, and if I knew that Loanspark existed, the first thing that I would do is I would partner with that company, because I know that Loanspark would provide me the opportunity to originate in 46 states without needing a license. And that also is a huge advantage, because it opens up the opportunities for me to receive referrals from this local network that I'd be looking to build pretty quickly.
And is there a niche that you would target inside of that space? Is there like something that you would go off after, right? Like maybe the local credit union does something really good. So I'm not going to compete with the local credit union that's been here for 40 years, but is there like a niche that maybe you would go after? And if you're in the Boston, right, much bigger. I'm in a small little like rural type community, but is there a niche you would go after, and what might some of those look like where you see maybe areas of opportunity as you go across the country?
There is. So my niche, I'd likely start with multifamily and mixed use. Okay. The reason behind that is because it's like multifamily properties and mixed use, they're kind of like this mystery, like it's complicated and hard, and there's not a lot of options to originate those loans. But they're actually, it's not complicated, it's not hard, and there are a lot of great options if you know where to look. So, and also the average loan sizes for those products are typically high. And it's a asset where there's seemingly less options. So that's an area where I would focus, because there's a large benefit to me, because I can earn high commissions as a loan officer, but also establish myself as the local expert, because a lot of banks, they don't want to do that product. And most mortgage companies, they don't do that product. So that's where I would likely focus first. And then I would swim upstream to ground up construction, because I think that's the next product that is seemingly complex and complicated, but it doesn't take a lot of effort to learn how that works and to become an expert in that product. And so that'll likely be the third asset class that I would focus on.
So you start with the mixed use, kind of the El Camino, right? It's not a car that the normal lenders want. It's not a commercial loan that the banks want. It's kind of that hybrid in the middle there.
Yeah, it's the car pickup truck. The car pickup truck.
What?
The car pickup truck. The El Camino, right?
I mean, the El Camino was like a unique thing.
Yeah.
What about just any of the, like the personal, like just personal business loans, those kind of things? Is I feel like I get tons of calls from people just asking me if I need, cash all the time. Like, it seems nonstop that my business is always pre-approved for X number of dollars. It seems like that's just a very heavily telemarketed area. But also when I see a heavily telemarketed area, it tells me there must be some gold there, or there must be something there. Is that an area that you would even focus on? Like the personal, I guess it's business lines of credit.
If I was starting, again, using your analogy here, starting as a loan officer today, like brand new, it's not an area that I would focus on as a business strategy. It's a tool that I like to have in my toolkit, but I wouldn't want to be in the sea of marketers that are marketing for that product, because I believe it's a heavily saturated market. Unless you have significant marketing dollars, it's hard to compete there. But it's not as hard to compete when your business is built on referrals. And if an individual is referring someone to you who needs that product, then you're not competing with all of the telemarketers who are calling in. So it is a product that I'd want it in my toolkit, but I wouldn't want to kind of join the madness out there trying to market for that product. If I'm an individual loan officer, I wouldn't want to do that.
No, that makes perfect sense. It's something that you have when the client's already there to fill the need, but not something that you'd be going out after. Which makes perfect sense. So any kind of final parting words? So like I said, my organization, the people that are probably here, primarily mortgage brokers, bankers that do, a fair number of business, but they're also all looking at growing. Any final words or things that maybe you'd want them to know about Loanspark. And we will put in the notes someplace wherever you're seeing this at, access to, like, I'll get Loanspark's information in there. We'll get Michael's contact stuff for LinkedIn. We'll get some basic contact details out there. Any other like kind of parting words that you would have for somebody?
I do. So my parting words would be, we exist to make your life easier and to help you make more money as a loan officer. So you don't need to say, no, I can't do a transaction. Your new phrase would be, maybe, let me look into it. And so we'd like to say to our loan officers, like, just don't say no. Say maybe, call Loanspark and see if there's an opportunity to get something done. Because I find that too many loan officers just say no because it's easier to just say no, right? Versus say maybe and just do a little research, make a quick phone call, 1-877-81-SPARK. We're easy to get a hold of, and just say, hey, run the deal by us and we'll see if we can help you out. So that's the idea. Don't say no, say maybe. There may be a home for the deal that you have in front of you.
Yeah, I think that's very sage advice. And don't overpromise either, especially in an area that you don't know what you can do. I have no idea whether or not I have something. I've got some partners I can research. If it's cool with you, let me reach out to them and see what we might be able to do. Does that sound cool? And pretty much most of your clients will say, yeah, that sounds cool. Absolutely. Get the details and go from there. And like always, if you guys have questions for me, anything at all, I like to think that I know a lot about a little or a little about a lot. I don't know which. But if you have questions about growing your business, areas, niches, different spaces that you could maybe get into to find additional revenue, I've got a really cool playbook called The Riches in the Niches, which you could use for the Loanspark program, for commercial programs. Heck, if you're an 87-year-old guy that runs marathons, you have a niche. You're an 87-year-old guy that runs marathons. So leverage your niches. And if you guys have any questions, concerns, anything for me, there's a ton of ways to reach out. Join our free community. We talk about things all the time, but I believe that having something like Loanspark inside of your toolbox will ultimately help you earn more money, whether it's more here in 2025, 2026, 2030. I know that by having it, you won't make any less money. So, Michael, I appreciate you coming on today. This is informative. Every time that I kind of go through something like this, I pick up little tidbits. So I appreciate it. Loanspark.com. It's got a cool little logo. I'm looking at it right now. Looks nice. Go check them out and reach out to Michael. You can also find him on LinkedIn.
Thank you, John. I appreciate it. This is awesome. Thank you for having me.
If you're still here and you're watching this, you're probably getting something from our content. If so, maybe you know, or I'm sure you know, someone else that could also benefit. So if you could do us a solid, forward this, share it with your friends, other people that are like-minded that want help with simple solutions to grow their business. And if you want to do a little bit of a deeper dive someplace on here, there is a place to schedule a call with us to talk about your business and how we can grow it together. Look forward to hearing from you again. Thank you for being here. Please do share.